Everybody, today is May 28, 2024, and today we're going to talk about the price of Bitcoin and where I think the price of Bitcoin is headed towards in the month of June. Before we begin, please read the disclaimer. You can pause this video as you read it. Okay, so where we left off last time was in late April, and I basically said that I still expect Bitcoin to continue going sideways, and hopefully defending these levels, the 100-day moving average, and also this Fibonacci support level, right? Part of the reason why I continue to expect Bitcoin to move sideways and consolidate before moving up higher. The first reason was that the inflation data, the inflation report basically showed that we were basically on an uptrend. And even though we had an inflation data that went down last month, that doesn't necessarily make a trend, right? We still need more data points, and we still want to see the next inflation report on June 12th, next month, to continue down, right? Somewhere less than 3.4, right? And as long as that happens, then the probability of a rate cut happening sometime this year, maybe in the fall, is going to go up. And that's going to be bullish for the market, right? The stock market's going to go up, and of course, Bitcoin is probably going to go up, right? So, but ultimately, like, Bitcoin is actually doing a pretty good job. I expected, in my last video, I said we're probably going to stick in the 60,000 range between these Fibonacci support and Fibonacci resistance levels for a while, right? Just move sideways, building a base. And another reason why I believe that is that I do think that after coming up, and I'll come to a cleaner chart, we had a double top here in the last cycle, right? And then we went down below and plunged below 30,000, right? And you can see here that this was support and it flipped to resistance. We tried breaking twice earlier last year, and eventually late last year we basically broke above and ripped up higher, right? And now we're at this different. Now that we're at the previous resistance level, which was our previous all-time high top, double top, right? And so it's not surprising that we're consolidating around this level. It's strong resistance before we break up higher. And I basically said that I do think that it's actually good for the market to do something similar like this, where we basically went up, consolidate, impulse move up, consolidate, and then do another impulse move higher, right? So consolidate. So I think that the probability of this happening is pretty high. Although I will say that the recent strength in Bitcoin has been pretty impressive, right? We've actually went up and took out 70,000, right? But even then, when you zoom out, you're starting to see like kind of these candles, and I'll do linear chart, so you can start to see these wicks. Those are usually bearish, right? That means the price tried to run up, but then it got rejected. So we see more of these like shadows to the upside. Generally, that's pretty bearish. So I do expect us, although I am impressed with the tenacity of Bitcoin bulls, I do think that this is still strong resistance around 70,000, right? And I've also been posting a lot on my Twitter page, EddieLux_. The link is in the description below. Please follow me or subscribe to me. I do post charts in addition to videos every month, right? But yeah, so I personally think we're probably going to still continue to go sideways unless the inflation report just plunges next month in June 12th, right? That or we are able to hold above 70,000, right? Push up, hold this level. I think that we're ultimately going to rip up higher, right? And I think a good analogy is to look at what we were last time here, right? We went up, moved sideways, hit the Fibonacci resistance level, went down, and ultimately held the support and then pushed up higher, right? And not only that, we came down to the 100-day moving average, went up, defended the 50-day moving average, the silver line, and went up higher, right? We're seeing something similar, right? We're hitting this resistance line, rejected, came down, held this support, and then ripped up higher. Hit this Fibonacci resistance, and if we were able to hold, we might actually go up higher. And similarly to here, where we came down, held the 100-day moving average, we come down here, and we actually held the 100-day moving average in addition to the Fibonacci support level, right? Then we came up, and we basically trended the line of the 50-day moving average silver line, basically consolidate along that, and then ripped up higher after holding it support. Here, we actually didn't trend too long. We basically ripped up higher and then went up to try to break through the Fibonacci resistance level, and we're still at that level, right? We're still trying to break this level, right? And we will see if we're able to do that within the next month, right? So let's zoom out a little bit more and look at the weekly chart. So the weekly chart is, if you look at the RSI, we are around just below 70, so we are still close to being overbought, but still, like, having it come down a little bit gives the oscillators time to reset, and when you have time to reset, it gives it more room to run up higher, right? But at the same time, we are still failing to make higher highs, right? We just barely cleared this high, but we still have higher highs a higher high previously. So we are technically in a minor, I wouldn't say it's really a downtrend, but we're just kind of stuck in this wedge pattern, right? Now, the problem is like we have lower lows, right? So that's not good. What we want to do is we want to perhaps come down one more time and start a trend where we start to make higher highs and higher lows, right? Okay, but for now, I would just say we're still probably trending within the 60,000 range, right? But again, we still need more time for this chart to play out to see if we're able to hold this or if this is just a bull trap that continues down lower, right? And if we do continue down lower, are we able to defend these moving averages that we've held so far, and of course this Fibonacci support level, right? But enough with that. Let's move on to some other indicators, right? So ultimately, I am bullish on Bitcoin. I still believe that we are in the 4-year cycle, and we're going to have probably the bullish cycle next year. It's probably the equivalent of 2021 or 2017, and all the charts on this really corroborate that, right? That thesis, right? We spent a lot of time in this accumulation area below the green line, right? And we basically are now in this like intermediate zone. We're in between being oversold and overbought, this orange red line, and we're sort of trending. And if you look at the past, this is also very similar to when we're in the bull part of the cycle before the exponential buildup, right? And Pareto cycle top indicator tells us that when the when the orange line crosses above the green line, right? That's usually when things become overbought, and that's when you want it. That's a sell signal, right? So every time this usually has marked the top, and right now we're nowhere near that, right? We're nowhere near that, but we're somewhere very similar to like 2016, where we're in this channel, and that channel is starting to tighten, right? The green and the orange lines are starting to converge. They're starting to merge. They haven't merged yet, but they're getting close, right? And eventually, the price is going to rip up above the green line, and that's going to bring the orange line closer to crossing. And when it crosses the green line, historically, it's been a good time to sell, right? But we're still in the middle of the trend, seems like, for 2016. So if we follow the timeline, we're sort of, again, near like 2016, 2017 area, and still ahead of this parabolic run that will likely occur next year. So things are still looking bullish, are looking good. Golden ratio multiplier tells us that we are still not overbought yet, right? We've hit this red zone, which is sort of like the overbought area, but we haven't gotten high enough to like create this dotted line. That dotted line means that we're getting to a point where the price is starting to get a little ahead of itself, and it could be a good time to take profits, but we haven't printed that yet. So we're starting in a good, strong, bullish uptrend, and if that's what that indicator chart is telling us. Now we can look at the rainbow price chart. We are still looking really great. This is a green zone, very similar to what we saw in previous bull markets. We haven't hit the parabolic area yet, right? We're still in this strong bullish uptrend right before it ignites and rips up high, right? So things are still looking good. Cycle Master, of course, telling us that we are still in the middle of the trend, right? We haven't hit the oversold levels, the red line, right? We're nowhere near that, and that would be in the 6-figure range. So still a lot of potential upside to go, of course. And lastly, we'll look at the price forecast, which combines a lot of different indicators to give you an individual representation of where the likely bottoms and tops will be in this cycle. As you can see, when we start hitting the red line, that's usually when you start wanting to think about selling, right? Taking profits. That's when things get a little overbought. Now when it hits the orange and green lines down here, that's usually when it's oversold. Good time to buy, right? So we're in the middle, and that's telling us we're somewhere near, like, again, 2016, early 2017 area. Last cycle probably, moving sideways around the, late 2020, which of course lines up with the 4-year cycle, right? And so ultimately, all these charts are telling us that Bitcoin is likely in a bullish cycle. And even though we're consolidating for like basically 3 months now, which again is a healthy thing, right? I think it'll be really unhealthy if we just rip up higher and then I think that we'll have a shorter cycle and we're not going to peak as much as if we rip up too high. And that's sort of my theory of why we peaked below 100,000 in the last cycle, because we end up ripping up too quickly, in my opinion. Whereas with 2016, 2017, we had the slower run, which took a lot longer, but it was like a slow parabolic rip, right? Whereas this one, we had an impulse move higher, consolidation, and an impulse move higher to a double top, right? This one, I think that there's a chance we can actually build something similar to what we saw here in the last cycle by kind of like ripping up, consolidating, and then just ripping up higher, right? possibly into the multiple 100,000 range, right? So obviously, I think a lot of us are expecting at least 100,000. The question is, what multiple of that are we going to get? Are we going to get 200,000, 300,000, 400,000? I don't want to get too ahead of myself because we haven't even hit 100,000 yet, but I do think that there is a good chance we might hit 3 or 400,000 this cycle, right? I think a lot of people are being very conservative and saying, well, based on last cycle, we didn't go up as much as we expected, so I think we should temper our expectations and probably expect 120, 150, and that might be true, and we'll all make a lot of money if that happens. But I think that people are really underestimating what happened with the Bitcoin spot ETFs, right? I think that is going to drive. I think it's going to continue to drive more institutional money into the space. And just last week, right, we had the Ethereum spot Ethereum ETFs were finally approved. Right, they haven't started trading yet. There's still more forms that need to be approved by the SEC. But ultimately, they basically got a green light. Not only that, but I think more importantly is that now that Ethereum has been basically approved by the SEC, which again, we had this nice rip back up to the local high, right? We're still far from our all-time high for Ethereum, but we're making progress, right? And it's actually, it's looking very, very strong. We had this huge pump up, right? But ultimately, I do think that the most important thing about the Ethereum ETF approval, is that now we have a better idea that the SEC and basically the US government views Ethereum as more of a commodity rather than a security, right? And that's ultimately going to be, I think, better for adoption. And just like the Bitcoin ETF had a lot of inflows and that required a lot of purchasing spot Bitcoin, right, to basically add the Bitcoin to the spot Bitcoin ETFs, I do think that same thing's going to happen for Ether. And I think the market is sort of underestimating it. Just like when we got the approval news for Bitcoin, the market kind of like pulled back a little bit, right, over here. Got approved. The spot Bitcoin ETF got approved in early January, and then it sort of like fell down, right? And then the inflow started coming, and then we ripped up to all-time highs. I think something similar is going to happen to Ethereum. I think the market is not pricing that in, where you might get a little pullback and then push up higher, something like that, right? But yeah, just really quickly, just on Ethereum. I know this is more about Bitcoin, but that ultimately, I think, is just going to really further legitimize the cryptocurrency space for bigger players, right? Institutions and also the governments in the US and possibly around the world. So ultimately, I think all of these things are tailwinds for the industry, very good. And I'm still very optimistic on the future price of Bitcoin. I do think it's going to rip up higher. And I think that if we continue to consolidate, it's going to give us a huge, larger spring to rip up higher than if we just like ripped up higher from here. I think building a strong base of support is better for a long-term price. And I think that for me personally, I do think that we probably will conservatively consolidate a little bit more before ripping up higher. But the fact that we're getting closer to 70,000 actually makes me a little bit more bullish than I probably would be normally. So if we're able to defend this Fibonacci level, if we're able to defend 70,000, I actually think we actually can go up higher and get into price discovery and rip up to new all-time highs, probably up to like 75 or 80,000, right? However, if we fail to hold this Fibonacci area around 70,000, we probably will come down and retest maybe in the low 60s. And of course, we definitely want to defend at the very least this Fibonacci support level, like we did over here, right? If we're not able to defend that level, I could see us coming down to like 50,000. But I do think at this point it's fairly unlikely. There's a lot of very positive developments in the crypto space, and of course with the Ethereum ETF, again, further legitimizing cryptocurrency space. A lot of senators, a lot of politicians are on board. Even Donald Trump has vowed to support cryptocurrency if he's reelected, right? But also another important thing, CPI report in June, right? This is also going to be important. We want to see, we only have one data point of inflation coming down. We need more to form a pattern, form a trend, right? So we definitely want to see the CPI report below 3.4 in June. And I'll definitely come back in June, late June, to update you guys on the CPI report and where the price of Bitcoin is headed for that month and also for the future month of this year. So yeah, ultimately very optimistic on the cryptocurrency space in general. Thank you for watching this video. Don't forget to like this video, leave a comment below, and subscribe for update if you found this video useful, helpful, and informative. I appreciate all your support. Thank you again, and have a great day.